listening to Pre-Market Prep. I'm Brianna Valesky in for Joel L. Khan, and I'm joined by Serge Berger. He's the head trader and investment strategist at the Steady Trader. Serge, how are you doing this morning?
Good morning, Brianna. Good to be on.
Absolutely. Well, everyone's just kind of sitting, waiting patiently. We've got a quiet earnings week, and we're all looking forward to the FOMC. What is your take on the broader market, and what's kind of your approach to this week?
Sure. I think and I think David. And I'm not a big person on just quoting, you know, CNBC guests and stuff like that. But David Tepper from Appaloosa last Friday, I believe it was Friday, had a really good a good take on, as he usually does, and he said that it's just not an environment to essentially press your bets. It's sort of a more of a bit more of good time to take a little money off the table. And I think to me the way I'm applying that to just right now, for example, this week. I think this week, from a risk management perspective, and I preach on this all week long. It's not a week to press any bets. You've got obviously the FOMC. You've got Friday, by the way. We've got quadruple witching options
Oh,
expiration.
right.
We got a Jewish holiday, which just keeps some people away. So there's just a whole bunch of stuff here that really doesn't uh, make it a really good risk reward situation to press your bet. So risk management at the fore. I am looking though to reshort the S&P 500, possibly after the FOMC, depending what the move looks like, for the first time since mid-August, when I was very public about my caution there. So I think we're closer again to some sort of volatility to the downside. Not immediate term, but I'm more interested now than I've been for a month to look the short side again.
You also mentioned you were looking at some other areas like currencies. Can you tell us a little bit more about that?
Sure. I mean, it's just if you look at the market, and I do think we have to look at the market globally, if you're an investor. And these days we can with all the tools that the retail investors have as well. So, everything is going to depend on the dollar. The dollar is the largest, asset class in the world by far. Everything is more or less tied to the dollar. So look away from the dollar. Look at things like there's a couple of currency pairs that are interesting to me, like Euro Swissy, so Euro Swiss currency. I think the Swiss franc is looking less and less like the safe haven it used to be. And I see this with a great amount of insight as a Swiss citizen as well. So there's
Mm-hmm.
a lot of reason to look at that thing. Maybe look at currencies like Australian dollar, New Zealand dollar, so Aussie Kiwi, some stuff there. Single stock plays, obviously Apple's always something to look at,
Yes.
particularly after the news we had over the weekend, Alibaba. Those are some things you can look at away from the dollar and FOMC related stuff. Although even there, Apple is such a big part of the broader market, would be difficult to imagine that Apple wouldn't move somewhat in sync on
Mm-hmm.
Thursday. But given the fact there's some spillover effects after last week's product announcements, some of the headlines over the weekend, and this morning, so that's going to give something like Apple a bit of a jolt. But again, even there, I'd be cautious into Thursday.
Yeah, absolutely. Well, let's take a little bit of a closer look at Apple. I think you had mentioned that you have an Apple long right now.
Yes, Brandon, we did that. We went long Apple last Thursday
Mm-hmm.
morning after we had a fairly, fairly solid bounce back after Wednesday's initial negative reaction to the stock, and so it was quite public about that. Bought the stock a little bit lower this morning. Obviously, this thing is giggling just north of 117 right now.
Mm-hmm.
So I'm going to be hitting the exit button there in just a couple minutes.
Yeah, absolutely. You also, and yeah, you're already ahead of me mentioning Alibaba. Barron's saying that the stock might fall 50%. Of course, it's been below its IPO price for what feels like forever now. What are your thoughts on Alibaba?
It's interesting, So Alibaba, in principle, I actually would agree, not so much with the facts that the author brought up in the article, because I don't know, But
Right.
but I would say in principle there certainly is still that lack of trust with the lack of transparency. On
Mm-hmm.
the other hand, we saw Alibaba fight back very quickly already. They've responded in a fairly long message already to that article. So to me, the fact that they are responding in kind, and this is a U.S. An NYSE and New York Stock Exchange listed company, Um, there's a we can't throw everything China related in one bucket, but still, there's some concerns that are warranted. And on the other hand, you
Oh,
have
right.
this you know this response that's already come out of Alibaba. So I think that's fairly constructive for the stock. I would say, in near term, but obviously this morning we're getting a bit of a washout. Let's see. I think from a true trading perspective, honestly, if we somehow bounce back after this morning's lows, and I don't know if we will, maybe we'll just crater. But if we somehow get back to the unchanged mark, creep back, it was a 64, 64 half mark. I think you got a pretty good spot to get long Alibaba for a trade.
Oh, interesting. All right. We also were talking about a couple of other fallen darlings in the market right now. Shake Shack is one that we brought up. Of course, some people think, our last guest, Scott Rudler, was saying, I think that the stock has been overvalued since it went public. What are your long and short term thoughts for Shake Shack?
Well, first I gotta tell you, in full disclosure, I had my first Shake Shack burger last Wednesday, and I'm still
What?
actually no Wednesday, and I'm still kind of dreaming about it. It was
Really?
awesome,
No way. Oh my gosh. Finally, we've been waiting for someone to come on and tell us like if this is actually a really really good burger. Where
And
did
I'm
you
like a little bit of a burger aficionado, especially
Oh,
given my last name. But no, in all seriousness, I let cheeseburgers are one of my favorite meals, and I tell you, I take them very serious. Like I really, I put my, I like to sit in a corner and put my game face on when I eat a cheeseburger, and this thing like totally blew me away. So it was awesome. But in terms of the stock, I think it's a good trading stock. I would be careful to just kind of put this into your into your IRA and just kind of close your
Mhm.
eyes, because at the end of the day, they are quote unquote just, and the burger gods will punish me for saying this, but just selling burgers. So
Yeah.
unless they're going to go undergo some sort of strategy where they really do, I don't know, I don't even know what their growth plans are for how many restaurants they open, but they've got, basically what we have globally, and I can tell you this, I travel the world a lot, and a lot in Europe and other places as well. So there's a real burger bubble out there. Over the
Ooh,
past few years, and
interesting.
not just, and some of that obviously spilled into some of these companies coming public, like a Shake Shack. I think it's a little dangerous to look at this as some sort of long-term believable growth story that's going to just knock everyone's socks off. But as a trading stock, it's not bad. It's a little
Mhm.
jerky, but look, at the end of the day, this thing came public what, in January? I mean,
Yeah.
to me, unless you're a day trader, a stock like this needs 9 to 12 months to get into some sort of a rhythm.
Yeah, yeah.
And I think we're just about getting there now. So, it's
That's great point. Absolutely. Another one that's kind of seems to have a little bit of a fall. GoPro. What do you think
mm,
about GoPro right now? Down. I'm seeing it like 32, almost 33.
yeah. Just crawling, just dipping below 33. It's a
Mhm.
little bit of a similar story to me, and you also have to consider, where we are in the cycle. So this kind of goes back big picture, and at the end of the day, we are in a 6 year bull market, economic expansion, and we're slowing down now. So economic growth has slowed. So a lot of these stocks came public, now towards the back end of that cycle. Again, we talk about Shake Shack in January. GoPro, I believe, came public last June, so a little bit more than a year ago.
Mhm.
So these are late cycle IPOs, and they're not going to just like fly off the shelf and remain high flyers forever. They're going to retrace. They're going to give people some pain, and ultimately, you can get into this thing again. I honestly don't know where these things are. What the fair value is for these things. What I do know is that if you get a really good flush out in the broader market, these things have a better than average chance of sort of giving you really good trades back to the long side. But you got to be patient. You don't want to be long these kind of stocks that are, you know, sort of, half-assed, for lack of a better term, growth stories. And I mean this
Yeah.
in a good way, because I
Yeah.
like what these things do. I love Shake Shack from a product. I love GoPro from a product perspective as well. But they're not really, they're not industrial companies, or they're not like,
Mm.
reinventing the wheel. GoPro,
Mhm.
as much as I love the cameras, and I got one. It's not Tesla, you know,
Yes.
and it's being treated as such, and maybe justly so, at least in the intermediate to near term, near to intermediate term, and I think longer term, we'll have to see. But from a trading perspective, there's no reason to try to sort of buy any sort of falling knives here, particularly this
Mhm.
late cyclical bull market. We need to get through, obviously, Thursday. We need to get through, a little bit more volatility, I'm hoping, and then these stocks will look better again. So I don't think we need to bend over backwards in these stocks right now.
Sure, sure, absolutely. One last one in our kind of basket of fallen darlings we were taking a look at this morning, Netflix. Have you been following Netflix at all lately?
Yeah, I was very active on Netflix, and I was very publicly short Netflix out of the money call spreads,
Mm-hmm.
far, far, far out of the money call spreads, into and after earnings. I did a bit of a TV media spin last week in various channels, and I kind of talk about that as well. And essentially, I think Netflix, to me, Netflix is different than a GoPro and a Shake Shack, because
Okay.
Netflix is sort of challenging an entire industry.
Yeah.
GoPro, I'm sure some people will argue that with GoPro. I don't think anyone's going to argue that with Shake Shack. Um,
Right.
you know, it's just a reality. So Netflix to me is something I definitely want to be a dip buyer of at some point. Again, very much like the broader market. I don't see any reason to be try to be a hero here. It's a very tricky environment this week. The reason I bought Apple last week was very much because I expected once so with something like Apple, you have a nice reference cycle, so they're going to come with a product. Then the analysts are going to need a weekend to kind of geek over the numbers, and once they come out with that stuff, and then usually Barron slaps something on, as they did again this weekend, and then they come out on Monday, you get some sort of update, and it tends to be positive, the update, which is what we're seeing this morning. So, which reminds me, I should close this position now.
Yeah, absolutely. Well, we won't keep you on for much longer, just a couple minutes left. But I mean, what are you looking at for FOMC meeting? Are we going to see a rate hike this week, in your opinion?
I don't know, and I honestly don't really care. To me, what's more
Okay.
important here, is it's obvious, it's important. Okay, so I'm not trying to belittle it, and it's a big thing, and the market's been nervous about it
Mm-hmm.
all year. I think you have to look at it more kind of big picture. What does it actually do? So, you know, what we're going to do is we're going to get away from a basically ultra easy monetary policy to just easy monetary policy. It's not like they're going to put the brakes on this thing and we're going to start hiking at 25 basis points clips for every
Mm-hmm.
next meeting.
Right.
That's not going to happen, at least not as far as I'm concerned. So, do I know whether they're going to hike rates or not? No, I don't know. And I talked to some very smart hedge fund managers every week, and we no one knows.
Yeah. Yeah.
Um, so it's kind of an irrelevant. It's a fair question on your part, on anyone's part, but I don't really think we need to be too concerned about it. What I'm more important. What I'm one of my mentors used to tell me that the reaction to the news is more important than the news itself, and particularly for an
Yeah.
FOMC thing in the near term, anything
Mm-hmm.
can happen. I don't know where we're going to stand by Friday. And by the way, Friday we have quadruple options expiration, so that's going to totally jinx whatever happens on Thursday. So this week to me is a write-off.
Yeah.
So I think we need to come back next week. Listen, if we sell it, if we rally into the after the FOMC and we get back S&P 2100, 2070 or so, I'll be the first one that's going to be screaming, sell. If we fall apart after the FOMC, I'm going to wait until next week and see if we get it. If that's the real deal, if we're going to fall apart again and retest 1870, maybe 1820, maybe 1700 for all I know, if we get a 20% move. But I think I need to wait until next week.
Yeah, absolutely. We've been on the line with Serge Berger. He's the head trader and investment strategist at the Steady Trader. Serge, thank you so much for joining us this morning. Good luck this week, and we will talk to you again next Monday.
Thanks, Brian. Have a good week.